Let's talk about the defense sector because we never talk about the defense sector. We talk about tech, we talk about commodities, but right now, this is a sector that's really getting its time in the spotlight.
Yeah, defense is the place to be. Look, even if this turns to be a short-term conflict, defense is going to be a net beneficiary. Germany has announced 100 billion euro defense spending. I think other countries are going to continue. So if you look at some of the defense names in the US, CACI, Lockheed Martin, Raytheon, Booz Allen, these companies are doing extremely well. In talking about defense, don't forget about cybersecurity, because along with physical defense, you have CTOs worried about cyber criminals, state-sponsored cyber terrorism. So CrowdStrike, Fortinet, Palo Alto are doing very well in this environment.
Kate, good morning. It's Guy. What about the energy sector? This is another area that people have been using to play the situation in Ukraine, to try and get some protection from what is happening as commodity prices rise. Just talk to me a little bit about, though, the risks of putting fresh money to work there. We've obviously seen a lot of money flooding in. Is there a danger that if you put money in too late, that you could actually see a huge reaction going in the other direction? Say we get the Iranian talks working out this weekend and we get progress there. More crude comes onto the market. If we do see a ceasefire in Ukraine, that would be fantastic, but it would have a meaningful impact on the energy sector. How volatile do you think that area is going to be?
I think, Guy, you have nailed it. The energy sector is cyclical. So you buy low, sell high. This is a classic buy low, sell high situation. We are more inclined to be selling energy here. Don't overthink it. It's a very simple sector. Right now, we own names like Cheniere Energy. Cheniere is at all-time highs because gas prices in Europe are up something like doubled. So Cheniere, which exports gas from the US, is trading at all-time highs. This is where you sell or cut back. You buy low and you sell high.
So you said it's already at a record, Cheniere in particular, but energy broadly has caught this kind of nonstop bid, and yet you have so many people calling for oil as high as 185. I believe JP Morgan was out with the note this morning. I'm curious, though, what happens if you do start to see some of these shale producers, some of these American energy producers add on supply to the market. Do you continue to invest in companies like that when you potentially see oil prices perhaps coming back down to earth?
You do not, because there's always a lag. So right now, there's insatiable demand for energy. So oil companies are going to be adding supply. By the time they finish adding supply, there's going to be an oversupply on the market. At that point, prices are going to go down again. This conflict isn't going to go on forever. So I think you have to be very careful. Right now, oil is at triple digits. Gas prices in Europe are up tremendously. Now is not the time. Now is the time to be circumspect about energy prices.
Okay, you bring up Europe, so let's talk about it. Europe has had a terrible, terrible week. Equities have been under really significant pressure. The banks have been hit hard. There was this narrative case at the beginning of the year that you wanted to put money to work here. Has that now been completely upended? Is the United States now the safe haven when it comes to equities, despite the relative drops that we've seen there?
Absolutely. The U.S. is the place to be, and frankly, I would avoid the financials. The financials. There was a narrative around the financials that you're going to have a rising rate environment and these banks are asset sensitive and therefore they're going to do well in a rising rate environment because deposits are going to be held and they're going to make incremental profit. I think that you're not going to see that happening. I think the Fed is going to be very cautious now about the number of hikes you're going to have. And then if you look at the European banks, I think the European banks are in trouble. You look at exposure to Russia, you look at counterparty risk, even on the asset management side, the Goldman Sachs, the JP Morgans. If we have this continued downdraft in the equities market, it's going to affect bank earnings. It's going to affect fee income. So US is a better place to be than Europe. Frankly, there's nowhere to hide. There's nowhere to hide in this market. I think this is a very tough situation. Energy, maybe that story has been played out. Maybe it hasn't. Commodities. We're going to be in an inflationary environment. It's going to be very tough.
Well, let's talk about the currency impact here, if we can. You mentioned the euro, you mentioned the European banking sector, but we also talked about commodities largely priced in the dollar, and yet you're seeing the dollar climb and climb, get stronger and stronger, simply as perhaps removing that exposure from Europe, but also that classic haven bid. Talk to us a little bit about the currency impact. How much more dollar strength can we really expect, and how does that ripple across some of the other investments?
I think the dollar is going to continue to strengthen, and paradoxically, there are going to be other currencies that are going to do well. Look at something like the Canadian dollar. The Canadian dollar is a beneficiary of commodity price increases. So the Canadian dollar is doing well. Look at the Aussie dollar. The Australian dollar is also doing well because, again, these are commodity based economies. So as you're seeing people move away from Russia, people move away from Ukraine, it's not just a matter of the commodities. It's who's going to the ports to get these commodities from these countries. And they're major commodity exporters. They're major commodity exporters with certain food, wheat, things like palladium, which are used in catalytic converters with cars. So I'm going to be looking for strength in the US dollar, and I'm going to be looking for strength in some of the other countries that are commodity led.
Kate, final quick question. In terms of what we should be expecting in terms of rates of return this year, what are you looking at? Do you want to be fully invested? How should people be thinking about their portfolios right now? Should they be being defensive? Should they be looking for opportunities? I'm just wondering from a sort of psychological point of view of how you're approaching investing and whether or not that's changed.
It's a very good question. Here's the bottom line. Short-term price movements are random. I've stated that over and over again. 90% of the move happens in 5–10% of the time. So I do believe you have to be fully invested. This situation isn't going to go on forever. If you have a well-diversified portfolio, you are going to be fine long-term.